Well, and good morning in Europe, good evening in United States. This is Alvaro with another daily outlook video. As you know, we are going to see what is going on in the market, what happened yesterday, and what should be our expectations from financial market today in the last working day of the of the week and the first Friday, which is going to be first Friday of month, first Friday of the February, which is going to be the NFP day as well. Today, later, we will have the NFP non-farm payroll data from United States. However, let's go back and see what happened yesterday. What caused market to fall sharply and then increase again right after that. What's going on in the economic calendar? Let's go one by one. In the economic calendar in the United States, we saw this here is okay. Let's go to the volatility chart. As you can see here, the volatility in the market fell and then again, let's go in a 1 hour chart, fell again and then started to increase. Generally, volatility in the market is increasing. There are several reasons for that. First, with tensions that going on with the Russian between the Russian and American, seems like it's going to be a little bit much more serious with sending the troops, state American troops to the Europe, and with the spreading the with the there is a distribution. There is a movie, the short period of the short time, the short small little kind of short movie about that kind of preparing some situation that's kind of that to blame the Ukrainian that you are the one who started the war. The Russian are preparing some videos or stuff like that to blame the starting of the war, to blame the Ukrainian as the starter of the war, the people who started the war. The Americans, the CIA published this information that the Russian is trying to blame Ukraine to start the war and by something that they are doing by their own. Anyway, this is something that I didn't. This is, I mean, I read just in the BBC and the different channels, different news channels. I'm not sure that what's going on here. Anyway, these things all happen together, and with the central banks meeting, they increase the market risk. In the economic calendar, we had purchasing manager index, and both of them they were better than expected. We had initial jobless claims at 238K, better than expected. Generally, the data that we had yesterday from U.S. economy, they were amazing. Same for Europe, same for especially in the United Kingdom. Purchasing manager index, they were better than expected and more than the previous months, which it means that the UK economy is increasing fine. At the same time, as we know, yesterday, United Kingdom also had rate hikes. This is the GBP/USD. United Kingdom also had a rate hike and increased interest rates. So it and put that decision lifted the pound against its cost a little bit and increased the pound. So generally, pound was in a soft uptrend against US dollar. As you can see in the cable chart as well here, the GBP/USD is increasing slowly, and with this current hawkish policies that we had from Central Bank of United Kingdom with 25 basic point rate hikes from 0.25% to 0.50%. This bullish trend can continue a little bit for a little bit longer time as well. We shouldn't forget that it was the interesting point in the British central bank meeting was that the 4 out of the 9 MPC members they voted for 50 basic point interest rate, increasing the interest rates. Anyway, they increased 0.25 basic points to the 0.50 in the UK. So therefore, we had a little bit hawkish policies from there to end. Also, they decided to end the bond purchase program by year end. But the surprise was here in the Euro USD chart. As you can see here, the surprise was in Europe. Central bank in Europe, we were expecting, as if you remember, I was expecting to see the central bank to go to decide a little bit how to decide for a little bit hawkish policies with 0.10 basic point rate hike. We were talking about that before. Yesterday, what happened yesterday was the central bank didn't change the main interest rates at the holidays and the current levels, same as for the bond purchase program. But later, after the announcement, a little bit later after the announcement, 30 minutes after the announcement, that Miss Lagarde has a press conference the surprise was there. Miss Lagarde didn't use the sentence that she used to say always as like, we are not going to have a rate hike by end of 2022 and before 2023. Yesterday she didn't say that, and she even mentioned that the European Eurozone economy is improving very good while inflation is in a very high level and we need to do something. That comment was good enough for the market participant to count on a 0.50% or 50 basic point interest rate hike in 2022. So therefore, the euro, this decision and this comment lifted the euro against its crosses. As you can see here, the euro against dollar, the euro against pound. Here, the euro against dollar again, GBP USD. If you look at the euro GBP, also it's the euro USD, euro GBP also is the same chart. You can see almost the same chart. Generally, the euro is getting stronger against its crosses, and this stronger euro, put the more pressure on the basket against US dollar basket, US dollar index basket. Therefore, USD is a little bit weaker, for more under pressure, and breached finally 96 level, which was the very interesting, very important kind of, you can see here. Up here. The USD index could push the violated and burst the 96 level, and it is trading right now in a downtrend. For now, we can see more pressure on the US dollar. However, today we will have the NFP number, and continuing the pressure on the US dollar chart is directly depends on NFP numbers. Now, the strong non-farm payroll numbers means more pressure on US dollar. Sorry, strong NFP numbers means more pressure on the stock markets, as it means that we are going to see the hawkish policies a little bit faster and earlier than before. So therefore, that will have the pressure on the stock market, and it will increase the US dollar. So therefore, we can see the reverse in the market. On the other hand, a weaker than expected NFP numbers means that going through the hawkish policies is a little bit right now is a little bit kind of earlier to do that. Therefore, we need to wait a little bit and be careful about that, to be cautious about that. Therefore, it will be positive for the stock market and negative for the US dollar. So we have to wait and see what is going on. And strong NFP numbers can help the US dollar. Otherwise, the US dollar can continue its way down. The gold, with the weaker US dollar, gold increased a little bit, and it is trading a little bit above 1,800, 1,806, but still 1,813 is needed to be breached, and to see the price above that, to say that, okay, the trend has changed. On the stock market yesterday, Amazon finally surprised the market with $27.3. Yeah, let me see the exact number. Yeah, 27.75. Sorry, $27.70 EPS earning per share, comparing with $3.71 expectations. It's like almost 10 times, 9 times more than expected. Eight times, almost 7 or 8 times more than expectations. What yesterday Amazon did was the reason was the reason to see that these peers, that they were falling, the reason that this, as you see, that yesterday the market was falling so fast, and the reason that we could stop this, the market stopped these peers, could stop the debate, was the Amazon report. We had other reports as well in the market. We had LED better than expected. We had the different Ford Motors, which lost expectations. But generally, the most of the companies again, they had a better than expected results. I'm saying the most, more than 80 or 90. In the yesterday's report, what I can see here is more than 90% of them, they had a better, they could beat the expectations. Therefore, the market sentiment is really fine. I mean, we can count on the better than expected market reactions and everything. Today we have Alibaba. We have Alibaba report today, which should be closely watched with the Amazon report. With Amazon such a great great records, Alibaba also is expected to beat the $16.20 or 19 cents EPS expectations. Probably it can beat the markets as well. So generally the market situation is fine. So therefore, today is on the speed. So today the market reactions and the continuing wave will depend on the NFP numbers. So far, and also besides all of them, yesterday we had other economic data. As I told, ISM manufacturing in the United States for the service sector was amazing, was better than expected. Economy is generally fine. Economy is generally fine. So accepting and seeing that the hawkish policy is going to be decided from the central bank side will be a little bit likely to say that, but we shouldn't forget that we need to be a little bit more caution, because if all central banks goes fastly a little bit faster towards hawkish policies, there we can see then we can see a problem, then we can see a weakness in the stock markets. Therefore, we should be a little bit caution also around this decision. On the cryptocurrencies market, still the news and the events, we don't have something that say that, okay, based on that we can see the change in the market. Still the news are negative, are not at least the positive for the cryptocurrencies market there. Therefore, we can see more pressure on the gold, on the Bitcoin chart as well. Sorry. Same thing we can see for Ethereum and Ripple as well. No matter what, here you can see they are falling and decreasing in a bigger time frames. So this is the overall general market situation. Market situation. I don't see anything else to say in the market. Let me see if there is anything maybe that I may forget. No, there is nothing that they say that, okay, I forget that geopolitical stuff I told about the stock market. I told, yeah, yeah. I don't see something that I forget. No, just like yeah, just I can say that the main important, or other the main important say that the U.S. 10 years bond yields again increased towards 1.85%. Just remember that 10 years bond yields is 1.85% and more, almost 1.86%. Be careful about that, and it can change so many things in the market for your trades. Okay, guys, thank you so much for watching this video, and hope it was useful for you. Don't forget to write your idea, write the comments, and let me know what you're thinking is better to do, to add or to cut in the video. Thank you so much. See you guys on Monday. Bye bye.